Hello, today we will learn about document splitting. Document splitting is a feature that has been added in new GL accounting in SAP ECC. The same feature has also been carried forward to SAP HANA Finance. Now, under this feature, it provides us that we can draw the balance sheet at three different levels below the company code levels. And those three different levels or the characteristics, or we can also call them objects, are either at the profit center level, business area level, or at the segment level. Now, profit center, business area, and segment, what are they? We can understand them with the help of an example. Let's say for a departmental store. So if Reliance is having a departmental store, so every departmental store which is located in any of the location will be a profit center. So it's kind of a company below the company. So we can have a balance sheet for each of the departmental store at every location. Business area can be based on the product, can also be based on the geography. So if it is based on the product, so let's say if this departmental store is or this retail business is dealing in two kinds of products, one is the automobile products and one is the consumable products. So these two products can be the business area. Now, segment can again be based on the geographical location, based on the product group, or can also be based on the customer groups. So, profit center and business area reporting is generally used for internal purposes, while segment reporting is mainly used for external reporting. We can understand the document splitting with the help of an example. So, in this example, a purchase is being made, but it is being made from a common vendor, and the purchase is for two different profit centers. So this document is posted at the company code level. At the company code level, the document will be balanced. So debit will be equal to credit. But at the profit center level, this is not balanced. So the debit at profit center YB701 is 11,666, while there is no corresponding credit in this profit center. So if we want to have a balance sheet at the profit center YB701 level, we can have that, but it will not be correct because debit will not be equal to credit. So we take the help of document splitting, whereas we want system to split the vendor side also in the same proportion as the purchases or the expenses. Similarly, while we are making the payment to the vendor, the payment will be made from the common bank. So it will not be split in the profit center. So if we activate the document splitting, this system will split again the payment to the vendor in the same proportion as the incoming invoice. Document splitting is achieved in 3 steps: the active document splitting, passive document splitting, and zero balance account. So active document splitting is when we are posting the invoice, whether it is the incoming invoice or the outgoing invoice or any expense or revenue lines. So what is does that during posting, the document is split based on an assigned rule into the required characteristic. And required characteristic is the whether we want to balance the document at the profit center level or segment level or at the business area level. So mainly the document type is the basis for the rule. So document how it will be split, that is based on the type of document we are posting, whether we are posting the vendor invoice, customer invoice, or any other expense item. Okay. Now, the passive document splitting comes after the document has been posted and clearing is being made. So while we are making the payment or receiving the payment against an respective incoming or outgoing invoice, so while we are making the payment, then also the document is split according to the same rule or the same criteria in which the document was posted. So active document splitting comes while we are posting the document initially, and passive document splitting takes place while that document is being cleared. Now, zero balance account is an additional step which is uh, different from active and passive. We can understand it better while I show you in the example that if we have not activated the zero balance account within the document splitting, then what the system does that it posts the debit and credit entry in two lines within the profit center level. I mean, the document will be balanced at the profit center or business area or the segment level, but the transfer entries will not take place. So if we want that transfer entry also to take place, we need to activate or we need to assign a zero balance account. We will understand it better when I show you in the example. We need some configurations to be done to activate the document splitting. For that, we will go to SPRO, financial accounting, general ledger settings, business transactions, document splitting. Now, the different configurations that are required to be done are: first, we need to classify all the GL accounts under the chart of accounts for document splitting, and then classify document types. Then we want to have the zero balance clearing, then we will assign a zero balance account. Define document splitting, and then activate document splitting. So we will go one by one through each of it. First, classify GL accounts. So we give chart of account. In my case, it is MCEA. So the accounts are already assigned here. So there are two ways of assigning the accounts. You will see that each GL account or each group of the GL account has been given a category here. So if you do not understand which category a particular account should fall in, you can simply put them under either balance sheet or expense and revenue. At least, while we are making the GL accounts, we will have the idea which account is a balance sheet account and which account is an expense and revenue account. It is always better if you classify them as per the given categories. But if you do not know or if you do not have, then at least classify them under balance sheet, expense, revenue, and also cash discount. So if I create any other GL account, so if that account falls under that category, it will automatically fit in. But if I have created one GL account, let's say 4600, then I will have to assign it here. So account from 4600. I know I do not have any account this number, so it will give me an error. And category, so that is an expense account. I will go and see. Probably I have an account. Okay. Now next, check document types for document splitting. So document type is important because as I explained, that document splitting happens in three steps. One is the active splitting, and passive splitting, and then zero-based accounts. So active splitting, which is at the time of posting the initial document, this is a rule-based splitting. So how that rule is defined? That rule is defined based on the document type with a combination of transaction and variant. So based on the document type, a combination of a transaction and a variant makes a rule or a method. So this rule or method is assigned when we activate the document splitting. So the splitting will take place based on this rule. Okay, so we will see that all the document types, whether it's a um, asset posting or customer invoice, customer payment, each has been given a transaction. You can see the listing of all the transactions. Customer invoice, vendor invoice, expense report, payments, CO posting. So here also, if you do not understand which transaction type a particular document should be assigned to, you can simply assign it to unspecified posting, right? But then again, the recommendation is to classify the document type in the relevant transaction. So these are generally, the already assigned at the client level, because let me also tell you one thing, that document splitting uh, activated or deactivated at the client level, and it can once it is activated at the client level, it can further be activated or deactivated at the company code level. Okay, so these settings are at the client level. So if you do not want to apply them to your particular company code, you can deactivate the document splitting at the company code level that you are operating. Next, we will define a zero balance clearing account. Chart of account. We can assign a zero balance clearing account. So this will takes place when you activate a zero balance at any characteristic level. So if this is the account is assigned here and a setting is activated at this level, document splitting characteristics for general ledger accounting. Let's say if you want to make the document to be balanced at profit center level, and also it for for balancing it, it should process the clearing entries using the zero balance account, and you can take it here. If you do not select the zero balance uh, characteristics here, even if you assign the account, it will not post those additional clearing entries under the third method, zero balance account method. Okay, so to be this zero balance configuration be working, we need to mention it here by ticking which characteristics to be balanced by creating the additional zero balance line items. Okay, now we can activate the document splitting. Document splitting is already activated at the client level. Okay. And the method which is chosen here is a combination, as I explained, is a combination of the transaction type and the variant. I can show you that. So the splitting method, which is the standard and recommended by SAP, is the method number 12. So it is same as the method number 2, which is splitting based on customer, vendor, tax money, and company code clearing. Okay, so how this method is defined? This method is defined based on a rule or with a combination of the transaction type and the variant. So if you see this method 12 includes all the combination of the different transactions with variant. So whenever the relevant document type, because this transaction type is uh, initially linked with the document type. So whenever we choose the document type while posting the entry, it will automatically pick the rule against that transaction type and the document type and split the document according to the characteristics that we define. Okay. So if we want to reassign or we want to change any of the rules, that we can do from here. For example, if we want to change to rule 1, we can do it here. If we want to change to rule 2, we can do here. But the recommended rule is number 12. Level of inheritance, that also is an important aspect. We will discuss that also. So after the method or the rule for document splitting has been assigned, next comes the level of details. So level of details is used in understanding that what unique characteristics, that is business area, profit center or segment, or what profit center should be filled in remaining fields or remaining line items. So inheritance tells the system that it should fill the missing positions by inheriting from the already existing lines. For example, if we are entering the incoming invoice and the profit center has been applied to the expense line items, inheritance would tell that the vendor should also be split and the missing position should be filled based on those expense line items, the profit center that has been filled against those line items. And also, while in the passive setting, when the document is being cleared, so again the missing positions for that unique characteristics will be filled by inheriting from the document that is being cleared. Whereas in the standard account assignment, it does not look up to the previous document or the already existing the line items, the characteristics in the line items. Instead, it uses a constant characteristics. So if you want to use the standard account assignment and if you do not want to use the inheritance, then you have to fill which characteristics that you want to use for the document splitting. Both the level of detail can also be used at the same time. So wherever it has the inheritance to be used, it will use that. But wherever it feels that it does not have the appropriate field to be used, it will use this standard account assignment. So generally, the standard account assignment is not preferred because wherever it finds the missing position, it will fill it with this one constant characteristic, meaning which the the balance sheet, the draw of balance sheet or extraction of balance sheet and profit and loss account may not be correct. So this is not encouraged. So that is why we always stick inheritance. After all the configurations have been done, we'll say no because we have not done any changes. We will go and we will activate the document splitting. So this document splitting which is active is it is at the client level. So if we want to activate or deactivate it at our company code level, we can deactivate it at the company code level. So we can do that. So let's say if my company code is MC1, if I want to deactivate it, I can do it, but I won't do it. I want to activate it. So go back. So it has already taken the method that we chose in the other option. Okay, and we want inheritance to be applied while it is doing the document splitting according to rule number 12. So we save it. Or we can post some document and see that how document splitting works. We will post an incoming invoice. Sorry. Add the characteristics. First of all, cost center. Um, 202. 701. 702. Now can, so what we have done here that we have only been able to enter the characteristics for the expense account, but because this is the common vendor, so we cannot split the document here while we are posting the invoice. So document splitting, because we have activated the document splitting, so while the document is posted, and when we see the entry in the general ledger, we will see that it has been split according to the profit center for the vendor as well, for the vendor GL. We can post it from here. Let's view the document. We know that we can view the document in FP03. this is the document. So there are two ways of looking at a document that has been posted. One is the entry view and one is the general ledger view. So entry view is the as it is view, the face value of the document, the way it is posted. Whereas general ledger view is how it will actually enter into the system, how it will actually take place in various GL accounts into the system. So the difference is only relevant only when document splitting is activated, because otherwise, whether if document splitting is not active, then it will be posted in the system the way we are preparing it. So there will not be any difference. So the relevance of general ledger view only is when document splitting is active. So we see that we mentioned the profit center only for the purchase account, which is the expense line item. And because the document splitting is active and we have done various configurations, so the vendor account and the tax account has also been split under these unique characteristics. So if we want to change the layout, you can say that if we want to sort it according to the profit center, profit center, and the subtotal is not active here. For some reason, subtotal is not active here. So let's see if it is there in the it is active now. So subtotals, we want subtotals at the profit center level also. So you see the document has been balanced at profit center level. So this is the active splitting, which is rule based. So this is according to the rule number 12, where based on the vendor invoice, it has been split according to into the same proportion in which the purchase account was split under two profit centers. We can make a note of this document so that when we post the clearing document, we can analyze both the documents together. Okay. So now we will post the payment, or we will clear this document that we just posted. So for clearing the document or for making the outgoing payment, we use the T code F-53. So document number this account We are making the exact payment. So process open items. Select all. Create items. This is the item we just posted. Select amounts are matching. We can clear that. We'll say post. Clearing document has been posted. So we'll see how the splitting has been taken place. So again, go to 03. So this is the entry view. And no profit center was entered in the while we were posting the clearing document. Let's see if the rule has been applied. So we see that passive splitting has inherited the rule from the active splitting. From the document which was being cleared, it has inherited the unique characteristic from that document. We can check this. Change layout. So profit center. Apply subtotals at profit center level. So we see the document has been balanced at the profit center levels. We can copy this document copy text. We will also copy the initial document. Choose. We'll format this because this has been copied in the text format. So we see that initial document was posted in the ratio of 62 to 38%. So we can check That splitting has also been done in the same proportion. So total purchases comes to 16,666 because a part of tax has also been deducted out of it. So the total purchases has been divided into the expense part and the tax part. So the expense part is 16,666. So 10,000 16,666 comes to 62%, and similarly 6,250 out of 16,666 comes to 38%. Similarly, tax portion also has been split the same manner. It is giving just the rounding off difference. %, and vendor. So we see that both the documents, initial documents under active splitting and declaring document under passive splitting, has been split based on the unique characteristics profit center. Now we will check that what happens if the zero balance account is activated at the profit center level. So we will change the configuration first, and then we will post the same journal and declaring for that, and then we will see that what changes take place. SPRO. Financial accounting, general ledger accounting, business transactions, document splitting, define zero balance account, standard account for zero balance. Choose your chart of account. So that account is already assigned. If you want to assign new account, you can do that. So sometimes the question arises that can we have different zero balance accounts also? The answer is yes, we can have different zero balance accounts also. So these are the different categories. So if you are posting any cash journal, then you can have a different zero balance account. So you can change the account here to accept. Okay, so the account is already assigned here. Now the next thing is that we have to choose that we want to apply the zero balance, or we want to apply the zero balance clearing. I'm sorry, I've been saying zero balance account. It's not a zero balance account, but it is a kind of zero balance account because it should not have balance at the end of the clearing of the transaction. So I want to apply the balancing at the profit center level. Now let's see what changes take place afterwards. So we will post the similar journal again as P60. Next, expense line items. We will put profit center. Simulate. Okay, so there is some of, because the document at the company code level is not balanced. The debit is more than credit, right? So I need to input the correct amount. Simulate now and post the entry. Because we have made the configuration changes, that is why it is adjusting all the tables. So the document number posted this time is 03. View the document. This is the entry view. Let's look at this is the general ledger view. So there is no difference at the active splitting. Okay. So the effect of zero balance account will take place while we are clearing this document. We can anyhow copy this document. Now post the clearing. This is the document that we posted. We want to clear the payment against this document. Post. Check the document. This is the entry view. Check the GL view. It has not considered the zero balance account. Why? Okay, I need to check that. There is some configuration, I think, that we did not do. That is why it is not picking the zero balance account. Otherwise, okay, I don't have any entry to show you. But that's how the document splitting take place with different methods and different rules. Thank you so much.